The guidance going forward is concerning. What's going to happen with energy prices is still concerning. I don't think, I for one think that energy prices are going to come and really take a chunk out of what consumers can spend and where this market's going. So I for one tend to be more conservative and think that higher energy prices are going to impact our market over the summer, and we're going to wait and see. But currently, earnings are coming in good. The market feels good about it. That's what it's telling you. We've had this great rally this week, so.
And just a last question, looking forward, are we going to continue seeing this rally in the stocks, or we're going to end the year?
Well, see, again, I tend to be more conservative. I actually think the market's well ahead of itself. I understand the earnings are coming in strong. That's great. But these earnings have already happened. Now we're going to talk about what's going forward, and that's where I think there's a little bit of a disconnect, because as much as I'd like to believe that this global recovery is happening, and I do think it is, people are now very concerned about inflationary expectations. I mean, look what they did in Brazil last night. They raised rates last night in Brazil. You guys are 12%. I think your interest rates are close to 12% or at 12%. And so the fear is what's going to happen here. And once they stop QE2 in this country, at some point rates are going to have to go up in this country. Inflation, is starting to percolate under the surface. So people are very concerned about that. So I tend to be a little bit more conservative. And I think the market is going to churn here for a while.
Do you see a correction at some point?
Well, I've been looking for a correction for a while and it hasn't come. and I think part of that problem is because QE2. You got the Fed pumping all this money in. And so I think the correction is going to come when the Fed stops. And so I think a lot of people expect that to happen. I don't necessarily think it's going to be violent, but I think it's going to be a correction. I think there has to be a correction. Nobody's expecting any change, so rates will stay the same. I think the market's already expecting that. I think what the real concern is going to be the end of QE2, which is coming only 6 weeks away. June is not that far away. And so the fear or the concern in the market is going to be what's going to happen when QE2 ends, and how abruptly are they going to be able to end it? Is it going to be more gradual? I know they've been talking about it, but the sense is that people are concerned about that. And the market's going to be concerned about that if the Fed pulls out too quickly. And I think the Fed's well aware of that, so they're trying to figure out how to pull out, how to say it, how to in fact telegraph that to the marketplace.